1.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders.
These are real trades. This is real money. I'm putting my money on the line.
This is going to be a live trading video here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
Here we go, we're live.
All right, guys, good morning. How is everybody doing? Thank you for being here. Frank called my name from the other room. If you guys can hear me, what's going on? Frank, if you have something to tell me, chat it. I'll see it. Good morning, everybody. Thank you very much for being here. Welcome back to another stream. Hope you're doing well. It is a Friday, so happy Friday to everyone out there. Thank you for joining me on a Friday stream. Fridays are always interesting because sometimes they're absolutely crazy moving, like today, and other times they're very quiet as people step away for the weekend. But we had a lot of movement on the US dollar today, so we're going to talk about that. The US dollar, you can see, is breaking through highs very nicely here at the start of the New York session. So very, very interested to see everything going on here, because you can see price basically breaking right through that high that we put in yesterday like it's nobody's business. And this has a lot of implications for a lot of the different markets that we've been covering. Yesterday, we did a little bit of coverage on everything happening with a lot of the US dollar crosses. And I expect to kind of be doing the same thing today, just updating you guys on where we're at. So if you remember, I switched to bullishness on the dollar, which I have not been bullish on for a while. So let's break this down and talk about it. So yesterday, we actually had Ivan come on the stream. He's a friend of mine and also another YouTuber here that talks about trading. Generally, I like to collaborate and work with other traders that I find, to be very reputable and intelligent in their stuff. And Ivan knows his stuff. So if you're not already following him on YouTube, definitely follow him. If you saw him yesterday, you'll know what I'm talking about. He knows his stuff. So the dollar continuing higher though today, and honestly looking pretty good for more upside to me. Now, again, you might say, well, Nick, this looks stretched quite a bit, but let's go look at some things really quick, you guys, and check this out. So let's go to the website. By the way, I did some edits to the site. I thought it looked a little bit nicer today. I made it so that we have like a featured post on the front thing, and I got to use my computer science major for something, and I tend to use it on the website. I built most of this. I did have some professional help when I first got it started, but you guys already know, use the website anytime. That's why I always pump it a little bit, is I pump the free website because, I spent a lot of time building this thing. So I hope you guys are getting value out of the different tools that we've made available on the site. So what I'm going to do really quick is I want to show you guys the retail Forex sentiment section of the website. So this basically is an embedded widget from myfxbook.com. And what it tells us is the overall bias on any particular currency pair we want to look at. So right now, for example, we can take a look at things like the euro dollar, and you can see that 84% of traders right now are stacked up on the long side. And that's a big deal because we're talking about the retail crowd. What we know about the retail crowd is that most of them, they lose money. You probably have heard me say that like 50 times, but I repeat it for the people who are newer traders stepping in and, who are a bit more confused about it. So again, watching this play out, you can see a massive shift of sentiment here as retail crowds go long on the euro as it falls, and they start shorting the dollar. Right, as the dollar's been pushing higher, we've got a lot of sentiment from retail crowds going short. They want to short the dollar yen, they want to short dollar cat, they want to short dollar Swiss. But we see a strong catalyst for the US dollar. I remain bullish on it for now. My idea with the US dollars right now, I think it has a positive few weeks coming for it with that big sentiment shift from the Fed, as we saw a few days ago, 2 days ago, I think. I am still bullish. I'm looking for bullish setups on the US dollar crosses. Before we go too far into the stream today, of course, you can see it rolling down below at the bottom of the screen. But I do want to shout out TradingView.com. If you guys are not already using tradingview.com, they are the absolute best charting software out there. I will jump in the ring with anybody who disagrees with me on that. I'm kidding. But, I think they're the best, and I've used them for a long time. I love the many, many features that you have access to using tradingview.com. And honestly, I am so honored and proud to be able to be sponsored by such a fantastic company. Their software is fantastic. I've used it for years. And you guys know, if I promote something, if I put something on my YouTube channel, I pretty much stand by it. It's something that I'm down for, right? And I love TradingView, and it's the easiest sponsorship I could have ever asked for. And if you're not already using TradingView, definitely go check them out. There's a link down below in the description. If you're a newer trader and you're looking for a better charting software, TradingView has 1.5 million features available to you. So go check it out. And if you haven't already, again, link down below in the description. Cool. So with that said, I'm looking at the dollar and I'm saying, well, I can't really see myself, jumping into long positions as we are at this point, unless maybe you're a day trader. There might be some day trading opportunities on things like the DXY. Maybe you're talking about a break and retest here of, a break of resistance and retest as potential support. But really, I think that the trade is sort of behind us. There was all this momentum right off the news. And, I took a couple setups, just off of the momentum, looking for that continuation. There's a lot to look at though. So let's go look at some of the individual currency pairs with that. And before I do, let me just look at the 4-hour chart with you guys. So you can see we cleared resistance like it was nobody's business. We just saw this thing break out and just shoot higher with no end in sight there. So very strong push for the US dollar. Definitely thinking that we could see higher prices even on the US dollar. Again, when you get a major catalyst or a major shift in sentiment, especially from like the Fed, that can be something that continues for not hours or minutes, but for days and weeks. So, it's one of those things. Do I think it's going to go straight up and never stop? Probably not. We're probably going to see pullbacks. We're probably going to be seeing setups, but for the most part, more interested in looking for continuations of the US dollar for the time being. Now, we've got to back out to the daily chart to really find like target areas for this thing. To me, a very natural place for the US dollar to head is resistance at 93.4, let's say. I think the dollar could definitely get up to that point, especially in the next few weeks here. Yes, we may see some pauses. Yes, we may see some hesitations there. But again, I'm looking at more upside for the dollar. And I know this is very different than what I was saying a week ago, but it's one of those things. When we get a major shift like this off of a major catalyst, I basically will I'll take the hit, and I'll just, admit that I was wrong about something and try and, profit where I can in the market. So for me, it's better to be quick to admit when you're wrong rather than stubborn in markets. That's been a lesson that I've learned myself many, many times, and honestly has carried over into other areas of my life. Just ask my girlfriend. So, I'm kidding. We have a very healthy relationship. But the thing is, it's one of those things. Just admitting that you're wrong quickly in life is a great, great trait. And when it comes to trading, it is absolutely imperative, in my opinion, because, if you're going to hold on to something and just be stubborn about it, let's say I was short here and I just kept coming up with the reasons why, it's still going to go down, still going to go down, still going to go down, still going to go down. And then it does this and I'm still trying to short this thing. That gets ugly real quick, right? So for me, it's more like, okay, I had short trade setups. I made some good money on the downside there. Definitely made some good profit on the short side. Started taking a couple losers in here. Paused on shorting the dollar. And then once the Fed meeting came out, not only did I stop shorting the dollar, but now I am looking to go long and to ride momentum here on the US dollar. So let's go look at some of the crosses. Let's go take a look at things like Euro USD to start out. What's the Euro dollar doing? Look at this, absolutely tanking through the 61.8. This is a massive signal to me that it looks like the Euro dollar may be headed down to the previous lows. This chart looks almost inverted to what we saw on the DXY, right? We saw the DXY shooting up after a prolonged down. Well, we see the Euro shooting down after a prolonged move to the upside. So for me, a very natural place to see the Euro go is a move back down to 1.17. Kind of a crazy, number to even mention, because that's so, that was, those were movements that we were seeing back in what? April of this year, so months ago, right? And again, when you get this sentiment shift, when you get a massive catalyst like this, it doesn't take a whole lot of time for things to just keep pushing against, where they came from. So again, we got this massive catalyst here from the Fed, and price just seems to want to continue to drop. So with that breaking through the 61.8, if price stays below that today, huge news for euro dollar bears. That is a massive level to clear. Anytime you draw a fib, you've got a lot of traders who look at this. They'll draw, the bottom, the top, and they'll say, well, there's a 50% retracement. The 50% retracement gave no effort to try and hold. Now the 61.8 completely breaking from a technical view. This thing looks bearish. I mean, it's not able to hold any of the supportive levels that, back in the day we were looking at long setups on. So I took some trades on the way up there, did okay with that. And then now we can kind of see this thing just rolling over and looks like it just wants to keep going. So a natural target for me on this is, can we get that push down to 1.1705? Those are areas that I see as very possible. Now, is it going to happen in the next day or two? I mean, maybe. This thing is crashing like crazy right now, but I wouldn't bet, I wouldn't try and chase this thing or anything like that. I'm not saying it's like absolutely going down right now. If anything, if you're looking at the euro dollar, maybe there's something like this. Maybe there's a pullback to, a decent level there that you could look for more setups. Actually, I really like that setup there. But again, very bearish here, breaking through that 61.8 and kind of putting in on a higher time frame note. Check this out. There's the high of the year, lower high on the higher time frames. That's a big deal in terms of bulls, bulls who were trying to get this thing back. And I was one of them. So I'm not sitting here like, oh yeah, see, I knew this was all going to happen. I actually thought that the euro dollar was going to tag 1.2035, and it didn't. So it came close. We were very close. I was saying that from back here. Once we broke 1.2, I think once we saw that level break, I was pretty much like, okay, now more bullish on the euro dollar. And I thought that move, we were close. We got some really nice upside, but we didn't quite get up to the 1.2035. Again, the concerns around inflation were big for the dollar, but then with the Fed coming in and saying, hey, we got you, baby, that's kind of concerning for euro dollar bullishness, because you've got the Fed stepping in and saying, hey, we're going to raise rates, or at least talk about it. Tapering could be around the corner, and just the sentiment shift, the change in bias there could last a lot more than people think. So again, for me, euro dollar on the daily chart is looking bearish. 4-hour chart, you've got a little bit cleaner of a view here. We could actually even draw fibs now on the other side. Let's say that this is the bottom. Let's just assume that that's the bottom, which, we'll see if it is. We can get rid of our old fib for a second, and we could talk about something like this. A pullback to the 50% now looks beautiful, right? You've got structure there that was broken out. Look at that massive, massive red candle. That candle tells a big story. Every other time we saw this price selling off, we saw weak retracements from the sellers, right? You can see on the way up, what you'll notice is that you've got retracements, but they're very quickly being responded to. They're very quickly being bought up. These are weak retracements compared to what we see right now. Right now, we see candles that are absolutely dominating, right? You see ginormous red candles. And that to me, and probably to a lot of other people, is sort of like a signal to not ignore. So for me, again, very, very interesting to watch. Can we see the COT report of Euro USD, please? Sure, Calvin, that's a good thing to pull up. Let's talk about that. Now, I will say, however, that we don't have COT data for this Tuesday yet. That will be coming out at the end of the day. That will be, if you're a VIP member, that'll be featured in Frank's research that he does, sent out Monday. So if you're not already in our private group, what I mean by that is we do a weekly forecast. I'm pulling it up really quick. So we do a weekly forecast that our team puts together, and it is basically a detailed report on the major markets out there. A lot of times, or one of the main components of that is analyzing and breaking down the COT reports for each of the major markets that we watch inside of the private group. So if you're not already in the private group, there's a link down below in the description to join our Discord. You get chat rooms. You can see any trades that I'm taking, Frank's trades, Patrick's trades, etc. But again, we put out research and and stuff like that each week for our members in the weekly forecast section. If you're already a member, by the way, make sure to read up on that each week. It's really helpful. I read it myself just because, again, Frank and Lily, they do a great job putting that together for us. So why not take advantage of it? So again, if you're already a member, check that out. If you're not already, there's a link down below in the description. Okay, so for the COT reports, let's look at the euro really quick. Now, this is lagging data because we don't have today's data yet. So you can see this is as of 6/8, which is June 8th. That's 10 days ago data. So this might be pretty lagging. Let's see if there was anything there. So you can actually see there was a slight dip on the euro, but not much, not too much of a move there. So again, I would say if you're going to look at the COT reports, check back tomorrow, even though it's going to be a Saturday. That's when you'll probably have the data updated too. So again, we'll have the most recent data by tomorrow. Just real quick on the dollar, just for why not sake, we'll pull this one up as well. So let's see. So the dollar, look at this. This is interesting. So in the midst of everything, before this crazy week for the dollar, it seems like there was already a move away from the US dollar. There was already a bit of selling that happened last Friday. So I would imagine that we have a steeper sell-off on the US dollar from institutional traders this week. We'll see if that is correct. Again, you should see that this evening, probably around 5 p.m. evening. It comes out at 3:30, but sometimes it's delayed on this site, on our website. So again, just some things to think about there. I will definitely be interested in seeing what's happening on the US dollar after everything this week. So again, if you're not already in our private Discord, or if you are in our Discord, check out that weekly forecast on Monday. I'm sure it will be very, very telling. And I myself will be reading that up on Monday. So so euro dollar, where do we go from here? Like I said, I really like retracements. If they do happen, maybe we look to short. But again, I think that the bullish thesis here has really been beaten back, at least from a technical analysis perspective. If you fundamentally disagree with me on the US dollar, that's cool. I respect you. You're wrong. But, it's one of those things. I'm kidding. You very well may be right. I can definitely be wrong. I've been wrong before and many times and will be in the future as well. So, just take that with a grain of salt. But the idea there with the euro is, we drew in these levels and everything just got destroyed. We put in a lower high on the higher time frames. The 61.8 retracement from this big major trend got obliterated today. Just for those guys who are tuning in, check this out. There's the fib, right? Long-term fib, 61.8. Knocked out today, 50% knocked out yesterday, 38.2 knocked out the day before. 3 days in a row knocked out completely from that strong uptrend that we had going on. So again, for me right now, euro dollar looks bearish and has more downside to come. I think you could see a move down to 1.17 sometime here in the next maybe few weeks. So again, we'll see. Pound dollar, let's see what's going on with this one. Pound dollar still losing against the dollar today, big time. And this one is so tough for me to look at because I wanted to be bullish on this thing for so dang long. And so now that it is giving me setups from a technical view, I'm sitting here fundamentally being like, but the dollar, that is tough. Ivan's in the chat. He says, euro dollar bulls are not beaten yet. We are strong. Ivan, if you have trades on there, I'm fingers crossed for you, but we'll see. Maybe the euro dollar bulls have another run up coming, but I think for now it definitely seems like it is falling strongly, and bears are in control. We'll see if the bulls can step up to the plate again. But so for me with the pound dollar too, look at this 1.4. We waited on that level for so many days, weeks, and maybe even like months. After price broke out of there, I essentially missed this trade right here. I looked at this. I really wanted that pullback. Never got it. Would have been a great trade if I did. I barely missed it there. But as price is chopping up here, right? It pulled back to this level. And after all that waiting, when it finally came back, I said, nah, I'm not gonna short the dollar right now. With that news being so different, it's a different tune than we were at, right? From the Fed. I had no expectations for them to talk about raising rates, to talk about, I thought, like I said yesterday, my theory was if they're just talking about it again, they're probably just going to say like, oh, we're not too worried about inflation, should subside, and we don't want to raise rates anytime soon. And, it was just different. It was just a different tune from them. But anyways, we talked about that a lot yesterday. The idea today is looking for technical setups after the fact. I've mentioned that I am bullish on the dollar for now. Working out so far so well, so we'll see. But with the pound dollar, as it pulled back to 1.4, I said, nope. And this is why, I do use fundamentals in my trading. I saw that all that major catalyst to the downside there for the pound dollar. And I said, I don't want to long this thing. I don't want to short this thing because I do also like, the pound fundamentally. But I'm thankful that I didn't, because that would have been a quick sweep on the long side. So, had I taken that trade, I probably would have put my stop somewhere around here, and it would have gotten nailed into the ground there. So I did not step in there, and I probably still will not. You can see very similar to the euro dollar, bullish price action, just seemingly getting beat up here. You can see the 61.8 there on pound dollar getting taken out here today. So same story as the euro dollar. If you're looking at fibs, which some people do, some people don't, I think that they're a pretty, just in terms of like a healthy trend, right? The reason I like fibs is because it looks really good. Like the trending nature of something, everyone can kind of identify a healthy looking chart, right? If you're looking at this thing and you say right here, this thing looks very, very healthy, right? Probably everybody who looks at this is like, wow, that is a very strong rising market. And what you'll find is a lot of that times that coincides with the Fibonacci retracement. So, here's one where it pulled back to the 61.8 and rallied. But once you start getting into deeper breakouts to the downside on the fibs, it's not that the fibs are magical. It's just that concept of a strong momentum driven trend is pretty recognizable. And usually what we see is when things are breaking down outside of a major fib like this, right? It starts to look less healthy. It starts to look more like a reversal and not so much of just a pullback. Once I get past like the 61.8, the trend there is pretty much not looking so good. And again, it has time here. If we look on the daily chart, maybe the pound dollar just has a major spike back the other direction, and we end up with a big fat wick down here under the 61.8 today. That could be some price action that looks pretty good. But for now, it looks like it's trying to break through here and may even be headed down to 1.30. What is that? 38. 1.382 or something like that. I have that marked from back here where we found support previously. So again, for me, look at this. This thing is hard to buy. It's hard to go against this. The dollar is quite strong right now and looking good against a lot of the different currencies for further upside. Did we look? I don't think we looked at the currency heat map. So let me just pull that up for a second off the site. We can pull this up here and just see, you've got things like the Aussie getting really beat up today, the New Zealand getting really beat up today, but then the dollar is just coming in strong. Again, green against every other currency today. So really big deal there. The yen is also strong today, which is kind of a big deal as well. You've got the yen performing well as it did yesterday, and then the pound just getting beat up. The euro's doing okay, not against the dollar and the yen, but everything else doing pretty well. And then you've got the what is that? The CAD doing okay. So kind of an interesting day, but the dollar and the yen seem to be on top right now. So we will see if one of them can take the lead or if not. But let's keep going along. We'll take a look at what is the next one. Well, let's take a look at gold. We'll take a look at XAU, USD, and see what's going on with gold. Now this is an interesting chart because now you're at a point where, unlike the euro dollar and the pound dollar, gold is testing the 61.8 and it has not yet broken it. In fact, it gave a try here. You can see a little bit of a try there on this daily candle to jump back up. And in fact, if you look at that in the lower time frames, that was an aggressive bid up off the lows, and now price coming right back down to that point. So really a big line in the sand for bulls here on gold. In fact, probably the most line in the sand spot that you're going to ask for, because you did have this breakout to the downside, right? Price shot down, continued lower. The Fed was they came out with stuff that really pushed prices higher on the dollar, which was not so good for gold. Again, gold responds heavily to things like inflation, right? And so when the Fed talks about measurements or actions that could lead to combating against inflation and really, snuffing that out, that's not so good for gold. So we see gold really selling off here. Lots of red candles there as things come in. Real not so good for gold. And so the question is, from a technical view, we're looking at it on a daily chart now, because look at this pullback on gold. I mean, that is nasty. The question is, will gold hold the 61.8? Because if it breaks it, I'd say we're right back down to the lows. That's pretty much what I would say for gold. If that is able to really break their 61.8, holding at 1775 or so, if that breaks, we're probably headed down to 1680, right back down to the lows that we formed back here. So in fact, we should probably mark that just in case things come crashing down to that point. So with that, on the bullish side, however, if this is able to hold, you're talking about if you're super bullish on gold, if you think it has more upside and you have your reasons, then of course, this could be like the greatest opportunity to get involved too, because if that trend is not dead, if that trend is not over, if you think that the US dollar is not going to be so bullish in the next few months or weeks, maybe gold is a great buy. But for me, like I said earlier, right now, I'm not jumping in front of the dollar. I'd not be interested in shorting the dollar or going against gold. So for me, that's the thing. Theo actually made a really good point. Good to see you, Theo. Thanks for being here. Theo says, gold is a hedge against inflation. The Fed raising interest rates means that there will be less inflation and less demand for gold, right? So very well explained. Thank you, Theo. That's the idea, at least. Again, what you're trading, however, is the question of like, will the Fed actually follow through? And Ivan made some great points yesterday when he was on here as a guest, talking about the fact that like, it's one thing to talk about it. It's one thing to hint at the idea of raising rates. It's another thing to actually give more concrete steps towards taking those actions, right? Because those actions, I made the comparison yesterday about how the ECB at one point was, the European economy was like really, really hated. It was like at a super bearish outlook for global, analysts. So that was a few months ago. And then the ECB came out and they said, well, hey, we actually expect a lot of growth for the second quarter of 2021. We think things are going to be back on track. Vaccine rollouts are looking better, and et cetera, et cetera. Everyone was kind of like, well, I don't know. The ECB saying that is one thing, but where are the numbers? Now, in that case, the ECB, the numbers did materialize. We saw some bounce back in things like unemployment and et cetera, right? So that sort of concept can be a pretty good, it can be a good catalyst, but it's really watching to see, can the numbers actually meet up? Can the rubber meet the road? Can it actually play out? And that's the question with the Fed. So for me right now, I'm bullish on the dollar, mostly on, buying the rumor and waiting to see if there is further news. Now, one of the things that I made also is that the US dollar is the world reserve currency. In fact, many banks around the world, if not most banks, if not all banks, they carry more US dollars than any other currency, right? They use that, they have that in their reserves in a massive scale. So when the dollar talks about raising rates at all, it's huge because you're talking about a stable option in terms of a place to invest. With any extra yield, it's like, if I could take less risk and make a little bit more money, it's obviously a bit more attractive. Put yourself in the perspective of if you had $1 billion to your name, right? And you're sitting there, you're like, where do I put this money? Well, if the US talks about raising interest rates and things are looking good for potentially, buying bonds or something that is super low risk, because again, if you're a billionaire, you don't need to make 50% a year. You don't need to make 20% a year. You just need to make a little bit per year to stay growing, right? To combat inflation mostly. So how do you do that? You can buy things that, slowly go up and are less risk. Well, bonds are like an example of that. The bond market is a massive, massive market. The Forex market is is huge too. But the bond market is a massive place where people, they lend money to governments and they collect sort of coupons. If you don't know what bonds are, definitely worth going down that rabbit hole. It's very interesting to learn about them, in my opinion. If you're a nerd about finance or financial markets like I am, they're very, very interesting. And anytime the yield or the return on those bonds is better relative to the risk that you're taking, higher interest rates are good for that. So again, something to consider there. And again, also when bonds become more attractive, gold tends to not be as attractive, in the sense that, if you're going to buy gold as sort of a hedge against inflation, or you could buy bonds that yield something. A lot of times people pick bonds when bonds are yielding like nothing, which they've actually been very, very low recently. Gold can be a little bit better of a choice. So again, doing a little bit of everything today, doing some analysis, doing some just talking about this stuff. But anyways, guys, do me a favor. If you're enjoying the stream, we got 530 people in here and we don't have nearly that many likes. If you are enjoying the stream, we do these things completely for free. We go live Monday through Friday, put on tons of different shows and free content for traders. You're able to watch this completely for free. If you're enjoying it right now, do me a big favor and just smash that like button down below. It's, like I said, it's completely free to do, but it really helps us out. It allows us to get things like sponsorships and to grow our channel and to do more with this so that more people can continue to watch for free. It's sort of like, by supporting us, we'll continue to help you guys out and to put out more free stuff on our newsletters, our Telegram channel, our, everything, our YouTube channels and website and everything. So just by liking the video, you really do support what we are trying to do, which is more free content for traders around the world. So a big thank you to you guys for being here. You guys make it possible for us to do this every day and to talk markets and to share our ideas. So thank you for being here and thank you for the likes. I appreciate them. I see them rolling in. So thank you. Okay. So yeah, with gold, I think we're at a line in the sand. It's just a question of, can this thing hold? Can we actually get off the lows here of 61.8, or is price just going to break right back down? And right now with that rejection, it doesn't look too promising here at 61.8, but again, just going to have to watch and see. The dollar is still rising. We can see, going back to the dollar, you can see this thing is just on a move here. 15-minute chart, you can see we're at the top of the range. And again, every little pullback seems to be getting bought up into. So very strong for the dollar right now. We will see if that can prevail, if that can continue. Of course, we will go from there. I do want to show you guys, I'll show you the trade that I am currently in right now. USD JPY going quite well so far. Again, I bought the pullback there. Just like I said, I was looking for the pullbacks there. I sent this out to members here today. So if you're not already inside of the Discord, I share all of my trades in here. So if I go long on something, you'll see it right in there. If I go short on something, etc. It's not like a signal service or a copy service, but I use this as a place to share my trades in the form of like a journal. We also have chat rooms. We do live coaching webinars. We do this weekly forecast, which is like our in-depth research done by yours truly, Frank. There's his picture. Looks like a dapper young man, right? So don't miss out on all the stuff that we're offering inside of our Discord. Again, this helps us to support the team and staff that we have here to do what we do, which is, bring traders together, bring value to traders, so on and so forth. So if you are enjoying the streams, if you're enjoying the content and you're looking to go a step further with us, of course, it is not free, but there is a promo code there down below in the description for you. Should you decide to join, it is discounted for being here in the live stream. So check that out. Use that promo code and get in there if you are interested. So again, dollar yen looking pretty good. I will probably be adjusting my stop loss here for those of you guys who are already members. I'm looking to try and trail stops on this thing and get going on this. We'll see if that can I'm going to watch to see if price can basically clear and hold this level here at 110.30 or so. But that is pretty much what I am watching. Took this trade on the 4-hour chart. So 4-hour chart, pulled back here. Beautiful entry there on the second attempt. I did get stopped out yesterday. So price stopped me out on this wick, unfortunately, but now able to re-enter there and looking pretty good so far. So we will see how this thing can hold off of this lows. If it does continue, I'm pretty much thinking that a price target there could be a move up to 110.8, which is the previous high there on the USD JPY. So that's what I'm looking at today from the trades that I'm currently in. So we'll see if that one can play out. Let's keep going along here. We'll take a look at, we looked at gold, looked at the euro, looked at the pound. What else can we get into? We can get into USD CAD. USD CAD, is Frank still in this trade? I'm going to pull this up. Frank is still in this trade. Oh my gosh. Holy goodness, you guys. Frank is in this trade in dollar CAD. He is long and trailing on this thing. He's also long and trailing on USD JPY. So Frank is having an absolute killer month. So congrats to Frank, and congrats to anybody else in the group that caught that dollar CAD move with him. Holy goodness. I mean, Frank, you were just right about this, man. Frank was telling me, he was like, I think I'm going to look for bullish setups on dollar CAD. And I was like, I'm pretty bearish on this thing. But, that was before I flipped and started looking for dollar bullishness. But you can see this thing is just absolutely flying high. Frank is in at, what was his trade? Hold on. Let me see. Frank's entry was 110.2. So let's go write that up on the chart. So 110.2. Wait. Is that right? No. Sorry, I read the wrong one. He is actually in at 1.2279. 1.2279. 1.2279. 1.2279. Okay. So right here, he is pretty much long there. So beautiful, beautiful continuation on that trade there, Frank. Congrats to Frank. My goodness. Yeah, congrats to Frank in the chat. That is actually such a crazy good move. Definitely loving that move on USD pairs today. Frank and I both sort of on the same thing. Frank and I have a very similar style of trading. We both like to jump into momentum and to try and ride things with trailing stops. So congrats to Frank, and into anybody else who is in the group who also caught dollar CAD, maybe rode that with him. Man, dollar yen, look at this thing. Just does not want to stop. Up to we just broke that level pretty nicely. Definitely going to be doing some updates for you guys after in the Discord. I will probably be trailing some stops here, trying to lock in some of that profit. We will see if it can keep going. But again, love that rejection. I chose to re-enter. Very glad that I did, because it met. I actually liked the retest, the second entry that I did even more than my first attempt yesterday. So Frank is always right. Well, Frank will be the first one to tell you that he is not always right. I am not always right. No trader is always right. And it's very, very important that for the new traders out there, you don't think that anybody is always right. I take losses. I took a loss yesterday. You can see it right here. I took a loss on dollar yen. So please remember that, there are times when people are doing well. There are times when people are not doing so well. And so, whatever you're at with your trading, please remember that even the best traders take losses. You should always manage your risk, properly. You should always be conservative, and you should not be gambling or being stupid with your money. Again, I always try and make that point as often as I can. You guys who are regulars here, you probably know this already, but for my friends in the chat who are new traders, please be careful. Don't go, YOLOing into things. You see it on Reddit, you see all that stuff, but I'm telling you, you are a sheep going to slaughter if you're going to trade like that, because people who show off on Reddit, or they'll show off making big gains and stuff, they will show you what they want to show you. They won't show you when they borrowed their mom's money and then they lost everything, right? So please remember that. Again, it's very easy to get caught up in what people are showing you and to think, man, I really want to get rich with everybody else, but I'm missing it. Like, they're not all getting rich. They're just showing you when they're making money. So just be careful. Just a word of, I've been in this industry for long enough to know there are just too many fake things to look at. People showing you nice stuff. People showing you, oh, I got rich from trading, when, it's easy to say things. I could tell you guys that I'm a triple zillionaire, right? If I wanted to. And sadly, nowadays, it seems like a lot of people will still believe that, right? So just be careful. Just remember everything. Take everything with a grain of salt. My phrase for it, I can't remember who originally said this to me, but it stuck with me whenever they did. I always liked the phrase, don't. Well, I guess there's a couple ways of saying it, but don't trust. Instead, test. So we all have brains, right? We're all able to go do our research and go try things out and study things. when you see somebody on the internet, we live in an era where it is very easy for people to, people are very gullible to what is going on the internet. People show you this, oh, I make so much money. Oh, it's so easy to do this. You just got to do this. Join my MLM, join my whatever, right? Everyone, especially young people, myself included, we know that it's very easy to be caught up and to be tricked into something because you're excited about it. Forex trading is no different. There's a lot of danger to just trusting people blindly. You should always always test concepts, test ideas, test theories, test strategies, test everything. Don't just trust just because someone said it. And that includes me and everyone else that you see through your screen. Again, just a word of advice from your friendly neighborhood trader, because again, it's dangerous just to trust blindly. You can get yourself into a lot of trouble. Again, here's an example. A lot of people who are very brand new to trading, they've never done it before. They've never done anything like that. They saw GameStop going up, right? They went on Reddit because everyone was talking about it. And they saw that all these people were saying, throw your entire life on GameStop and get rich with us, right? And so the trusting nature of a lot of young people who had never done this before, they had never traded, they had never learned about even what is a stock, what is a currency pair, what is a cryptocurrency. They don't know anything about it, but because everyone is talking about it and excited and making it a hype train, they jump in. They jump in because it's going to the moon and everyone's saying they're very trusting because they don't know any better. And so when you are trusting and you don't know any better, you actually are like probably at your highest level of risk ever, right? So don't ever just trust. You should always test whatever you're thinking. Like, for example, if you think you're going to miss out on GameStop and it's going like this and you decide to buy, you are not only going to get smoked, but you were the one, all those people who were like pumping it and making it sound so good, they're getting rich and they're selling it to you, right? That's the danger. It's like a Ponzi scheme. You get all these people telling everybody else how great it is. They get in and then they short the crap out of it or sell it at least, right? They sell the shares and then it just absolutely goes down. And everyone claims, oh, diamond hands. But in reality, everybody is just like selling off their shares in the back room. It's like a total scam. So, it's very, very dangerous stuff. It's not that you can't make money trading momentum and maybe even, trading momentum stocks. But the idea is just that trusting blindly is the number one way to get smoked in markets. FOMO, right? Trusting it's going up, so it's got to keep going up. It's going to, go to the moon. Very, very dangerous effect. Let's look at Dogecoin. Another really, really good example of this is everybody who had never heard of markets was buying Dogecoin because it's like Dogecoin's going up. And, the trusting nature of people, they start out, they're like, well, my friend told me about Dogecoin, so I'll buy Dogecoin. And then Dogecoin went to hell. It didn't go to the moon. It went to hell, right? So that's the thing. You just got to be careful. You can't just be trusting. Now, it doesn't mean that Dogecoin can't keep going up. But again, you've already swindled all the people who know nothing, right? The people who know nothing, who bought up here because it's going up, they already got smoked. They probably sold out. They probably lost. Maybe Dogecoin goes up. I don't know. I'm not a fortune teller. Maybe from here it finds support. Maybe, for some reason it gets attached to some way that people can actually use it in a legitimate way. But that's where you separate people who are actually trying to invest and treat this seriously compared to the people who their friend told them about it. So they bought it thinking they're headed to the moon. So again, very, very dangerous stuff for new traders and for new people. And it's not their fault. It's just everyone, right? Everyone is naive when they first get into markets. There's nothing, it's not that, oh, they're idiots for doing that. It's, that's up for debate, I guess. Some people would call them idiots. Some people wouldn't. But I would say it's just the gullible nature of somebody who gets into markets. When I first got into Forex, man, I was an idiot. I wasn't even just gullible. I was just an idiot. So, I assume maybe some other people are smarter than me. So again, just trying to give you guys a little bit of a little suggestion there is when you see everyone hyping something up, pumping stuff, just be careful. You're funny. Thank you. I felt a little funny there. I'm not going to lie. Probably just because it's a funny subject. I mean, it is and it isn't at the same time. That's why it's funny. Is because some people got smoked in those events, those GameStop run-ups and Dogecoin. And it's just, It's a dangerous topic, and it's sometimes you just got to laugh at those things as well. So that is pretty much with what I've got for today. Ivan says we laughed. If I made Ivan laugh, it's a good day. It's the truth. Whales are no better than banks. So much for DeFi is pure because banks are bad. Pump and dump, says Hannah. Let's see. I just want to make sure I didn't miss anybody's key points. You can get tricked when you're old as well. That's true too, Mark. You're right. You're very right. Unfortunately, like some of the, like when they, like the IRS scams and stuff that go on, right? They target old people because they just don't know like as much about technology. So you're right. I think it's probably just good to, in general, regardless of your age, just be aware that anything that seems, this the age old saying, anything that seems too good to be true likely is. So just be careful. With that said, guys, I'm going to wrap it up. It is a Friday. We only have one show today. So sorry if you were hoping for more content. If you're not already subscribed to my channel, make sure to hit that subscribe button down below. Come back and see me, hang out with myself and the rest of our chat room here. We got a lot of great people who show up on the regular. So thank you. You guys know who you are. So thank you for being here. And guys, we'll see you back Monday. We got a lot of stuff coming next week. Things are probably going to heat up even more with the US dollar. Whether it goes up or down, there will surely be some momentum, some volatility, some things going on with that. So stay tuned, guys. Thank you very much for being here. I hope you have a great rest of your day, and we will see you back on Monday.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.